Hello traders, it's Sunday, June 26th, and this is WMoption's weekly review of last week's financial news. First and foremost in the week's headlines were the events leading up to Thursday's dramatic referendum that's casting a shadow over world markets and the future of the United Kingdom. On the agenda, global benchmarks, which have fallen from 3 to 12% across the board, pound futures, which are down 7.6%, and the resignation of Prime Minister David Cameron, who has engineered the worst aimed shot to the foot in the recent history of world politics. Agencies are calling Britain's AAA rating no longer tenable, and other European countries seem to be nonplussed as they too explore their own route out of the European Union. A recent Pew poll indicates that more than half the population in countries like France, Spain, and even Germany wouldn't be too sad to see the European Union go the way of the Brits. Just a reminder of what came before the crash, economic sentiment in Europe on Tuesday was up 20 points, and markets manufacturing PMI for the zone was up to 52.8. In the US, other than probably delaying their long-anticipated interest hike to 2018, indexes behaved less tragically than would have been anticipated. Futures are down about 4%, meaning that the jolt tomorrow shouldn't be too bad. Still, the S&P has lost the entire year's gains and is currently in a worrying decline. US data over the week wasn't good, with factory orders and durable goods in May down. Housing data was good and crude oil showed a drawdown, but both readings fell short of expectations. Continuing jobless claims were also down, meaning that the labor market is showing a slight improvement. However, with the euro and pound expected to drop significantly over the next week, US dollar strength is going to hurt exports and economic growth for the foreseeable future. In Asia, the biggest sector at risk is financial services, focusing in on Britain's former colony, Hong Kong, now a major trade link for an already faltering China. Meanwhile, Chinese President Xi Jinping said on Wednesday that Chinese companies have so far invested about $15 billion in the Silk Road Transport Initiative to connect China with Europe. And the Chinese-initiated Asian Infrastructure Bank has announced that it is planning its first bond issue. Over the week, slight improvements were seen in Japan's leading index and the Nikkei manufacturing PMI, which is still well below the 50 expansionary border mark. Oil prices on Friday slumped by over 6% after the Brexit announcement, but both blends seem to now be consolidating around the $47.60 and $48.40 mark respectively for WTI and Brent. Gold on Friday shot right past the 1300 mark and is currently steadying at just about 1319. Events to look out for next week are Monday's bank stress test, where the largest US banks are tested for their ability to withstand major market upheavals. This test was enacted in 2009 after the global financial meltdown as part of the Dodd-Frank financial overhaul law. US GDP will be in on Tuesday, and sentiment indicators for the EU on Wednesday should be interesting, as should the EU's Consumer Price Index and ECB policy meeting on Thursday. Finally, on Friday, look out for ISM's manufacturing PMI for the US. That's been it for this week. We'll be back tomorrow with the first of our London market reviews. We'll see you then.